Renee, who's from Spire Mortgage Team, and I wanted to talk to you a little bit today about some special considerations if you're considering a new build. There's two types of new build financing: completion mortgages and draw mortgages. Completion mortgages are more common for properties under $1 million with production builders, a builder that's building many homes in one community. With a completion mortgage, you will give the builder a deposit, and then the lender will fund the rest of the funds required to complete on the loan on the day that you get the keys. With a draw mortgage, it's a little different. You will give a deposit to the builder, and then throughout the build period, your mortgage will be dispersed in draws by the lender. If you're thinking about a completion mortgage, you need to think about a rate hold. A rate hold is a worst case scenario rate that we put in place for our clients to make sure that if rates go up, they are protected and they know their worst case scenario payments. If rates go down during the build period, you're still eligible to obtain the best rates available in the market at the time of closing or the time you get the keys. With a draw mortgage, it's a little different. Your rate is set at the beginning because the money begins to be advanced as soon as that build starts. So there's really no rate hold. You're choosing your rate and your product right from the beginning. If you need a rate hold, it's very important that you understand when your approximate completion date is. In this market, builders have had delays. So if your builder is anticipating a 9-month completion date, you might want to think about a rate hold for at least 12 months to protect you against builder delays. When you're dealing with a completion mortgage, you want to make sure that you're staying in touch with your mortgage broker every single time you add an upgrade to that home purchase. If you're increasing your price by $50,000 or $60,000, you want to make sure that you're still eligible for that loan. Another thing to think about is your appraisal. If your mortgage requires an appraisal, you should have the property appraised on the front end. That means the appraiser is looking at the drawings, the blueprints, the specs that are going into the home and the land, and making an estimated appraisal value. We want to make sure that the appraisal is happening at the time that you are writing an offer. It's an unnecessary risk to wait 12 or 24 months to get an appraisal on a property. It's very important that during a completion mortgage, you stay in touch with your mortgage broker every 2 or 3 months, just to stay on the same page. Make sure that if any changes are happening to the contract or any updates to the completion date have been made, that the mortgage broker is aware and they can advocate for you with your lender. Overall, a new build mortgage is just a little bit different. Let us take the stress off this transaction for you. Reach out to our team and we'll help guide you through the process.